Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, December 14, 2018. Please don't forget to hit the like button and subscribe to this channel. Lots of interesting price action to cover this week, lots of stock action, potential bear market. I'm not yet 100%, but we'll see what happens Sunday and Monday, because it is looking really bad. So we'll see that the sector breakdown, some of the sectors are in outright bear markets, while some of them are not exactly 100%, and some of them sectors are potentially bullish. Lots of breakdowns, retail, IWM, the small caps, transportations. We'll look at some of the stocks that I don't normally look at, and just interesting price action. Bonds are signaling flight to safety, and I'm potentially getting ready to short gold, natural gas. We'll look at natural gas. Oil also bounced, or rather oil could bounce, but the trend is still down. Alright, so here is S&P 500 futures. So let me zoom in on the latest price action. And this price action is really bad. I don't know how else to say it. We have, number one, a failed breakout that occurred on December 3rd here, 2018. After that, we got lots of selling. Here was a really bad day here on December 7th with a breakdown. By the way, these lines here on the chart, the green, blue, red, and yellow lines, are available if you go to MasterChartsTrading.com and click on alerts and indicators. You can find out more about them. These lines are calculated in real time. I'm not drawing them. So what we have here, well, I'm going to move this out of the way, but you can see that today the price closed at 2600.25, and I keep saying that my line in the sand is 25.99. Sometimes I just wonder if gods of stock market is playing with us, because you can see that the price just came down really close to the yellow line and just stopped there. So I'm hoping we're gonna get some clarity on Sunday and possibly Monday, because if we get a close below 25.99, I'm thinking we're gonna collapse. Not necessarily like just immediately collapse, but maybe we will see a slight bounce. But then you see how we have this short sellers in action. This just shows that short sellers or bearish traders are dominating the price action. So if we get a close below 25.99, I am guessing we're gonna get a breakdown, and the way to measure this breakdown is to look at the pattern. And here the pattern is sort of like a big W, and on the December 3rd here, I thought we were going to be breaking out, but obviously we failed it and collapsed lower. So if indeed this is a W, and now we can say that this is an inverse W, I can, like that maybe, you can see that the depth of this pattern is around 7.62%, and it is a normal thing to estimate a breakdown with the depth of the pattern. So you can see that if we get a breakdown, then the futures may end up short-term target around 23.95. So that is a significant drop, obviously, and I think that would be just the beginning of a bear market, because then we'll be basically seeing the same thing. We will see a bounce, and then the short sellers will come in and then sell, and the prices will get pushed lower. Now, a miracle is still possible, and we could pull out of this bad looking chart maybe will somehow miraculously bottom here and rally. How likely is that? I am not, obviously nothing is for sure, but it looks bad right now. So I would be super cautious about entering any new positions, on the upside. In other words, I'll be, if I was to consider buying, then I would really think hard about it before committing. So I got the potential breakdown that's possible, and then now let's look at the various stock sectors. So first let's look at the bullish sectors, and obviously utilities is one of those sectors. We have been trading them on the upside, and MasterCharts Trading, I sent alerts on the 5th of October, on the 16th of October, and then another one on the 31st of October to buy, to go long here. Utilities are a relatively small part of the S&P 500. You can see the breakdown of S&P 500 index sector allocation. This is S&P 500. You can see the utilities are a really tiny sector. It's about 3.3%, as is real estate, which is about 3%, and as materials, well, materials we'll get to. But the important thing here is utilities, real estate, and consumer staples. Overall, utilities, real estate, and consumer staples account for a little bit over 10%, 12-13% or so. Throw in healthcare. Healthcare is a major sector, it's 15%. So those, sectors, the three sectors, well, you can add the consumer staples as well. So we got utilities, staples, real estate, and healthcare, about 25% of the market. Maybe 30 at most. So overall, I'm looking at utilities, and they look pretty good. I'm not going to argue with this. This is an obvious uptrend. The problem, as I always keep bringing this up, is that utilities are stocks, and they will get sold if the entire stock market turns around and starts going down. There is no way to hide in utilities during a true bear market. XLP, consumer staples, they look okay. I had some positions myself open. Alerts were sent to my subscribers. Latest alert here also was sent, but again, this is what I call an aggressive alert, because me personally, I'm not really interested in buying here, because the S&P 500 itself is near the breakdown levels into the bear market, and XLP, the staples, it's also stocks, and stocks have high correlation to the general market. So I would be very cautious about entering new positions. Real estate also pretty strong. Again, you can see the up arrows here. These are all alerts for my subscribers again to be buying them. I'm not shorting any stocks currently. Real estate perhaps also in a decent space right now. Don't forget again that real estate is a real estate investment trust stocks. And once again, if the entire market decides to turn around, then real estate investment trusts will also get sold. This has happened in the past, and very little difference if the reason for the selling. When stocks get sold, everything gets sold. Okay, so we have several sectors that are still in bull market. Utility, staples, real estate, healthcare. Couple of sectors that are barely in a bull market, that are discretionary, and technology. So let's look at that. XLY. You can see discretionary approaching bearish levels, the yellow line here, very close to the bearish level. Discretionary, consumer discretionary, XLY, the most important stock fund for the economy of the United States, because this is discretionary income is basically what the economy is all about here. And then XLK technology, well, you can also look at QQQ, but we're very close to this yellow line. This is a bearish indication. Again, I think if we close below here, we could see a bounce, but I think the short sellers would come in and start selling this. And then we have a whole bunch of sectors which are in an outright bear market. Communications, XLC, financials, industrials, energy, and materials. So let's look at those. Here's XLC, this fresh lows, and you can see top, there's not enough information for my indicators to draw the lines, because you can see that the trading on this fund just started recently. So, but just visually looking at it, we're down 18% from the recent highs. So I'm fairly certain that this fund is in a bear market. This fund includes Google. Here's Google, and this is also in a bear market, I think. I think we can see lower lows and lower highs. Okay, so we have also financials. So let's look at financials. Very important sector also, XLF. Look at this. We're broke down and we're at new lows. And notice the downward facing arrows. This is where I personally would have shorted, should I so, desired. And we're getting there. I think I'm going to start shorting, especially if the S&P 500 decides to collapse lower. Then I think on pretty much any bounce we should look for a selling or shorting opportunities. We also got basic materials. Basic materials broke down a while back. Again, notice nice opportunities to sell it. A couple of here in November. XLI, industrials, super important sector as well, and we're at fresh lows. Energy, not a big sector, but still fresh lows. So we got materials, industrials, communications, financials, and energy all in a bear market. So all of this is just not looking good, and we are at MasterCharts Trading. We're trying to position ourselves appropriately, basically. And for me, this would imply that I'm cutting my exposure. Notice that I have changed my exposure to stocks in my retirement allocations to 20% stocks, 80% cash. A few percentage points more and I'll have no stocks. This is one of the probably best ways to deal with the bear market in stocks, is to, say it, have no stocks. If you have we are in a bear market in stocks, that means we're going to be losing value. So why would you want to hold something that is going to be losing value? So I would be exiting all of my positions if the breakdown occurs, and it sure as heck looks that way right now. Also, we'll look at a couple of other sectors. Well, the XRD is not really a sector, but it is a retail industry group, and this is also a relatively recent breakdown here on December 7th. And I sent to my subscribers an avoid letter on this one, and it looks like we're breaking down even further. Small caps, IJR or IWM broke down in October, and notice opportunity to short. Here's another opportunity to short on December 3rd, basically, if you are more of an aggressive trader. But notice a fresh low. So small cap stocks making fresh lows. This is not a good sign, once again. Transportation, big deal. IYT, fresh lows. I sent to my subscribers avoid here on December 6th. Notice this price action here on December 3rd, how the price came up to the blue line and failed here. Actually, the same thing happened right there on October 17th. The price action You can see the price came up to the blue line. These lines are drawn in real time. I'm not making them up. This is a calculation by the trading view with use of my indicator. So you notice that right there on October 17th, the price broke down and was rejected here at the blue line and then broke down. The same goes a couple of weeks later, right there on December 3rd, where I'm hovering right now. Price came up to the blue line but failed to close above it and then collapsed. So overall, this is another good sign, especially considering transportation is a very important industry group in a sense of the Dow theory, where the Dow Jones Transportation, Dow Jones Industrial Average, and the Dow Jones Utilities are at interplay. You can look up the Dow theory. Alright, so a couple of interesting charts, I thought. Preferred stocks, first of all, PGX. This is more of a price action kind of interesting thing. And for example, here back on July 6th, you can see kind of similar pattern. Price came up to the blue line, failed to close above it, and collapsed. If I was shorting it, I would have sold it here on 26th of July, and you can see that this would have been a successful trade because I would have put my stop at above the blue line. Another opportunity to sell or short right there on September 7th. Well, actually there was a bunch of them here, but this is probably one of the better ones. And you can see a nice big breakdown as well with fresh lows recently. Another interesting chart, EPI. This is an Indian stock market. Just kind of interesting price action. You can see a breakdown. Well, I think the original breakdown occurred here on 24th of September, right there where I'm hovering. And then from then on, I would just only think in terms of short and selling. And you can see that, once again, those indicators are drawn in real time. So right there on the 29th of November, I would have said, okay, it's time to sell short. And there is that trade. Very nice 9% move in your favor. And you can do this with options. You can simply buy puts. And another one I wanted to highlight, it's Apple. Not a great looking chart, obviously. My subscribers already got the caution, and we're approaching just outright bear market levels. I think a breakdown below 164 here would be not very good at all. But anything is possible, and a miracle can still happen. And the turnaround in the market could occur. Alright, let's continue to bonds. Let's first look at TLT, the long-dated treasuries. Now, in my opinion, this is a bearish security, and you can see that conservative short levels, aggressive short levels. So right in this instant, we're at the conservative short levels. But I'm also looking at this chart from the point of view of intermarket analysis. In other words, it's not that we're not only just looking at the chart, we're also looking at other charts. So here the TLT, even though it looks like on the yesterday on 13th of December 2018, I would have probably shorted it here. I did not actually do any of, I didn't actually short this particular security because of the overall flight to safety. You can see that as S&P is breaking down, TLT, the bonds, are actually rallying. And notice also these indicators are curving down, making it easier for the price to come up and close above the blue bullish levels here, currently at 121.96. You can also look at TYX, and you can see that even though TLT seems to have closed on December 13th below this red line, TYX, the opposite, the actual treasury yield, did not close above here. So it's another reason why I did not want to short it. So I think the yield is coming down. In other words, the bond proxies such as utilities and real estate, may benefit from this. But as I said before, they are still stocks, so you need to be very careful and look at them as stocks and not bond proxies as much. IEF, the shorter dated treasuries, also are rallying and are very close to a breakout. And a breakout will occur if I see a close above 103.64 currently. So bonds are acting consistently with a flight to safety. We're also getting ready to short gold, XAU USD. If you trade Forex, then you know what I'm referring to. Here was a nice trade on October 26. You can see we actually did short it here. Right now, I'm still not convinced that the correction in gold is over. You can see correction in the sense of we're rallying in gold because I want to sell it. I think it's in a downtrend. So I want to see the kind of like a conclusive close below the red line, currently at 12.37, and then maybe we'll look for a shorting opportunity. The opposite is obviously true of dollar, where, well, actually these are fresh highs right there today. This is a bullish chart, so it could still break higher. Natural gas and GAS. Again, if you're a beginner trader, I would just strongly suggest you avoid natural gas. This is by far the hardest thing to trade. And as I pointed out a few weeks ago, hedge funds get wiped out. Professional investors get wiped out in this with this security. Right now, we see a big break below $4. Is this a bearish sign? Not necessarily. I still think right now natural gas is in a bull market. I just need to see a pull higher and a close above $4. But anything is possible, and a breakdown below $3.41 would signal a turnaround and a turnaround to the downside. US oil doing absolutely nothing, kind of just trading sideways. Generally speaking, this is a bearish security. You can see a breakdown right there on the 2nd of November where the arrow is. We actually shorted CL1 exclamation point right there. We shorted at MasterChartsTrading, we shorted the security with a 20% drop that followed, so hopefully the subscribers went ahead and opened a short position. Overall, oil is on a downtrend, and I think I would be waiting for a bounce and then maybe look for another opportunity to sell it. Alright, I don't think there's anything going on with crypto, so they're basically at fresh lows, so nothing happening there. Alright, so please head over to MasterChartsTrading.com. We're rebranding and possibly we're going to be changing things around a little bit, but overall the gist of the service remains the same, and we're basically offering a risk-free trial, 30 days on all of our subscription services. You also get free access. You don't even need to do anything, just sign up. And this free access is good for a training section. So you get lots of videos on training, how to use the indicators. But if you actually want to use the indicators, then you'll need to register, and I need to turn it on for you, basically. Same goes for alerts. You get lots of alerts on various securities that we trade, and of course the best deal is alerts and indicators, and of course the best deal would be at only $29 a month if you build yearly. Alright, that's it for this week's recap. Again, if you found this video interesting and useful, please like the video and share it with others. Thanks for watching and have another great trading week. Bye bye.